All content distributed by the Lazy Trader Limited and thelazytrader.com is intended for educational purposes only, and the Lazy Trader will not be held responsible for any losses incurred. While our trade ideas and market analysis are born from our wider understanding of the experience from trading the financial markets hold merit, they do not guarantee success or profit, and you should not undertake the act of trading them unless you are fully aware of risk management and how to place an order with the broker correctly. Users of the site should understand the past performance does not indicate future performance, and that the value of investments and income from them may go up as well as down, and are not guaranteed. You may lose the entire amount invested. With some leveraged investments, such as spread bets and CFDs, your losses may potentially be unlimited. Unauthorized distribution of our intellectual property, both electronically and physically, is theft and will be in breach of international copyright laws. Offenders will be hunted, prosecuted, and cursed for life.
Happy Friday to you traders, welcome to the weekend almost. It is the 31st of January 2014, and also a very happy Chinese New Year to you, for those of you that celebrate it. Today is the start of Chinese New Year and the Year of the Horse. I'd like to wish you, obviously 2014, the year of prosperity and profit. So without further ado, this week's market scope, true to form, we'll talk about upcoming opportunities, what's on the horizon for the medium, long and short term, in addition to what trades we're currently in or have taken in the past week. So we didn't take much last week. We took dollar Singapore, and we took this off the back of an inside bearish pin bar reversal of this level of resistance at 1.2830. This level has not penetrated in quite some time, so it gave us a very good heads up that price action was due to ricochet off it, given that the last time price was above it with conviction was all the way back in June 2012. Do you remember what you were doing then? I sure as hell don't. Anyway, price action has memory, even though I don't, and we can see that we've got an inside bearish pin bar reversal, we've got divergence on the RSI, and we had a lower high on the hourly time frame back at the point of taking it. So we took the trade on Monday as a reversal trade, bearing in mind that reversal trades are far less likely than trend continuations. However, in exchange for that, they are a lot more profitable, and profit is where the money is at, of course. So we took the break of the low on Sunday night over our stop loss above the high of this inside bar here, with the view to trailing it for every second seller bar. And we had Monday tripped us into the trade very nicely. Tuesday, low test, we moved our stop loss to break even, and the next day we got basically tripped out of the trade. So this was a no loss trade, and we had the benefit of moving our stop loss to break even, which was fantastic. It was a free trade, and quite often you've just got to be in it to win it, and this was a no loss trade, which is absolutely fine, bearing in mind that capital preservation is a very underrated thing in trading, especially amongst people who are new to trading. All they want to do is make profit and more profit, but however they overlook the fact that preserving capital first and then making a profit is the better way to do things. Despite being counterintuitive, I know. So what trades are we still in? Well, we still took we took pound New Zealand, this cross pair, all the way back on the 15th of January, and it's broken to the upside even more. We actually took this bar, which took out the high of this bullish pin bar reversal on the 14th, with our entry just above the high of the 15th and our stop loss below the low, and we've trailed it for every two buy bars since. Some of you are still in the trade, some of you didn't take the trade. Absolutely fine. You just take the trades which you're completely cool with and which resonate with you. Of course, it's damned if you don't, damned if you do sometimes, but this trade has gone on to make, well, 10%, risking 2% per trade. This morning we actually moved our stop loss to the low of Thursday, given that this bearish pin bar reversal is just ricocheting off this horizontal level and this trendline resistance as well. So of course we wanted to bank profit at the points where, if price action came down to create a sell move, then at least we would scoop our profit up out the way and take advantage of a decent like 8-9%. However, what's happened as it's broken along, thank goodness we haven't been stopped out of this trade. We're still in the trade, or most of you still are in this trade, and this trade's a good until the market turns the other way, and we'll be trading our stop loss for every 2 buyer bars. So hang on in there for those of you that are. Those of you who aren't, don't worry, there'll always be another trade. Don't worry, this isn't the last trade that the market's going to give you, so chill out, don't worry, and be selective for the next opportunity. For those of you who weren't members of the service, when we took this trade, we had a confluence of reasons in support of this trade. We had a bullish pin bar reversal off this horizontal level, 1.90506, also off this trend line support as well. And we had hidden RSI divergence, and trending upwards. The cyclicity is in our favour, making higher highs and higher lows. We also had, on the hourly time frame, we also had a reversal pattern after, with that all-important higher low that is, after the 15th. That's why we took it a day late, not on the break of the high of the bullish pin bar reversal, but we took it on the 15th, because on the 15th we had evidence of a higher low on the hourly, and this is what we had. This is why we took the break of the high here on the 15th with our stop loss just below the low here, instead of the classic placing an entry to go long above the high of the low test bar with our stop loss below the low. We thought we'll play things a little bit safer, and it's worked out in our favour, so let's keep on in there. We also talked about Aussie New Zealand approaching this 25-year low. Fantastic opportunity to take advantage of this. However, the conditions weren't quite right. Of course, we had last Friday closed as a false breakout, bullish pin bar reversal, breaking just below this 25-year low here, where price hasn't been, on this big rejecting this big round number, 1.0500. Fantastic opportunity to go long. We had bullish reversal divergence as well, in our favour of potentially going long. However, given that the brokerage or all brokerages are only able to allow you to place the trade after typically a gap on a Sunday or Sunday evening GMT, the move had already happened. Unfortunately, we wanted to get in halfway down this bullish pin bar reversal with our entry below the low, with the view to getting an efficient entry, bearing in mind that if there is only, say, 35 pips difference between our entry and our stop loss, apart from, well, compared to 88 pips, then we've essentially doubled our reward to risk. And given that quite a few of these big moves, they typically fire in our favour, come back, retrace and make a higher low on the daily, we wanted to be cautious. And as we didn't get that opportunity to enter halfway down the bar, we thought we'll just let it do its thing and go, prior to coming back and making that double bottom on the daily. As history has served and shown us, most of these big moves have come off the back of a reversal on the daily time frame. So we wanted to be careful, having the market already giving us the opportunity and us not getting it in time on Sunday night, Monday morning. We wanted to obviously wait for this reversal on the daily to happen. So thanks to that double bottom formation, it gave us acceleration behind this, what went on to make in excess of 15% for this pound CAD long move all the way back in 2011, summer 2011. Can you remember what you were doing then? A long time ago, but these are the kind of trades we want to be patient for and of course be selective, and this is exactly what we're waiting for on Aussie New Zealand. Of course there are other examples which I can show you with regards to waiting for this filter, if you like, prior to taking it long. So what we're doing patiently is just waiting for Aussie, New Zealand to come back to this level or just above this level, low test, before we take it long again, and we've got that acceleration point off the back of that. So that's very much on the watch list, Aussie, New Zealand. And furthermore to that, we've got plenty more for the watch list, you'll be glad to hear. But even though it might not be ready tomorrow or next week, the fact is that we've got an awareness for it before it actually happens, so that we can essentially stalk price action along the way, wait for it to come to our trap, i.e. our level or our technical level, and then we can trade it. We don't want to be chasing trades, so if you've signed up for the service and you're expecting trade alerts every day, then I'm sorry, I'm going to hate to disappoint you. You will not be getting them every day. You'll be getting trade ideas and of course a lot in the watch list, but our duty as a professional trader is to simply be selective and of course judicious when it comes to the selection process, because there are a lot of setups out there which are designed to trick us, and it's our job to simply be discerning in our choice in eliminating the duds from the studs. And by the way, more trades doesn't equal more money at all. Just in case you are wondering. So on the daily time frame, we've still got cable, the British pound versus the US dollar. We're still making higher highs and higher lows, and if it's not broke, don't fix it. Had a seasonal bearish bias around about this time of year, but of course this is just not panning out for 2014. The cable has proven to be very bullish against the US dollar throughout January, which is something. It doesn't usually happen. So if that's the case, then we don't want to get in the way of the bulls. So what recurring nuance do we see with cable at the moment? We see that it's making higher highs and higher lows. It's snaking upwards very nicely. It's tested the 50 moving average here once, so that's serving as a very good dynamic level of support. So as and when cable comes back on the daily time frame to test his 50 EMA once again, a low test, and we get a reversal on a smaller time frame, then we will take it long to a new higher high again. As it's with the trend, we've got the percentages and the odds stacked in our favour, rather than trying to catch a major reversal when frankly we're still making higher highs and higher lows, ebbing and flowing upwards up the river. So let's move on to EuroCAD. We are trending beautifully for this one. It's getting steeper and steeper as well. You see here this higher high and higher low formation in a beautifully formed channel is very uniform. However, it's broken north of this channel and the trend has got yet steeper, making higher highs and higher lows. So all we're going to do is wait for price action to come back to this dynamic level of support, just like cable, the 50 moving average, and if that intersects with this trend line resistance on the top side of the channel, then we will take it long if we get our reversal bar, for example. If we get basically the same as what happened with the pound versus the Canadian dollar all the way back in December, we had price action breaking ranks, breaking to the upside of this trend line resistance, get a move back to test this trend line resistance as support, followed by a continuation to the upside. So as pound CAD is evidently leading this move, we'll anticipate EuroCAD to follow suit in due course. Patience, my friend, patience. And pound CAD, of course, true to form, we're still waiting for a pullback for it to do exactly the same as what I've just mentioned with EuroCAD, for it to come back and test this level of trendline resistance in addition to the 50 EMA preferably. Even though the 50 EMA hasn't been tested before as yet, it's still nice to have that crossover nonetheless. So let's talk about Euro Aussie now. I think we're warming up to a long here. Or it's run before us. We're in a decent upward trend, making higher highs and higher lows. We've got complex retracement, and since the last extension, last August 2013, through to winter, we've had December, we've seen a correction, followed by an extension, as we've seen throughout January, followed by retracement. So we're just waiting for it to come back to a technical level again. As you can see here, it's tested the 50 moving average. 50 moving average is seemingly quite well liked on the daily time frame. I prefer the 20 personally, as it's a good or much better reflection of speed and momentum in a fast trending market, whereas the 50 moving average is not quite so. So we're just waiting for price action to come down to the 50. Ideally we wanted it to turn around at this level here after making a higher low. However, our reversal bar is a little bit too big for us to get the necessary reward to risk to take it for a higher high. So this is still very much on the watch list, it's just not quite ready yet. And of course we've got, moving on to Euro GBP. It's beautiful in the way it's trending. Its macro and micro cyclicity we'll show you on the weekly. We are see it in a very long-term downward trend here ever since 2009, making lower highs and lower lows very in a very uniform manner and very predictably. And guess what, we're now in a phase one. But within this phase one retracement, and when I say a phase one retracement, I'm talking about the extension leg. So from this point, from August 2013 all the way down when it started this lower move down, to when it goes down to make a lower low, which could be later on this year, it could be later on next year. We're quite far away from that point. However, in the meantime, bearing in mind we're looking at the weekly chart, we need to look at the daily and see what opportunities we've got in the meantime. And we've got our own phase one cyclicity on the daily. Bearing in mind there are cycles within cycles. So this one here, we know on the weekly we're in phase one, so there's a much higher chance of us going down. But how about the daily cyclicity? We need to get the most optimal point of entry here. So we identified the fact that we've got phase one, the extension, phase two, the retracement, phase one, the extension, phase two, the retracement, phase one, the extension. We're in an extension leg at the moment, so all we're waiting for is a retracement back to this trend line, and if it overlaps with a previous swing low, like for example the swing low of the 4th of December, then we've got a fantastic correlation here. Just need to lie in wait and hold in your hand, sit on your hands, sorry, rather than simply looking at this chart every day and hoping that this setup will occur sooner than it already will do. It will take time, but good things come to those that wait, especially end of day set and forget traders. So we're most definitely in wait and see mode for Euro GBP. Let's have a look at some of the Australasian based currency pairs now. We've got Aussie Swiss, a beautiful cross pair. By the way, I think there's way too much hype surrounding the majors and the minors when actually the crosses have got far more to them. If you ask me, you didn't ask me, but I'm going to tell you anyway. There's a lot more cyclicity in quite a lot of the cross currency pairs at the moment, as you've probably noticed yourself so far in this presentation. As you can see here, we've got Aussie Swiss moving to the downside, making lower highs and lower lows. But as we can see here, earlier in January, the 30th of January, we had this retracement back to this previous swing low, where we had the start of the continuation of another phase 1 leg and the extension downwards. So what we're waiting for is a new key lower low to be made for Aussie Swiss before we get the retracement back, where we get a potential reversal, maybe a bearish pin bar reversal or a doji or double inside bar interacting with the point where it intersects with the previous swing low after, well, the 30th and the 19th of December. But we want a new lower low to be made. Some might argue it already has been made, however I'd rather have more of a breakout followed by a retracement before we can actually take it for a long-term continuation based trade. So in wait and see mode for that one, like we are pretty much every other trade we've talked about today, which is absolutely fine. We just want to go for less. Remember, less is more and more is less. A cliche, but it's very true when it comes to trading financial markets. Remember Euro GBP we just talked about? It's the same kettle of fish really with CAD Swiss. We've got this on the weekly, this high order cyclicity making lower highs and lower lows here. And we can see here at the moment we're in this big phase 1 extension leg. Looking at the weekly, so now we can scan down to the daily and we can see where there's any, we're very extended to the downside on the daily, unfortunately. So what we're waiting for is a pullback to this trend line, and if it overlaps with the 50 moving average, and we'll obviously trade it short, but we need to wait for a retracement for that. So we are quite overextended on the daily. However, as we can see on the weekly, we've got, certainly looking at how this currency pair has performed historically, we've got plenty of opportunities to take advantage of, given that we're about halfway through the previous swing low on the weekly time frame, and that's before we've even made a lower low on the weekly time frame. So we've got plenty more pullbacks and retracements and trading opportunities on the daily time frame. Please bear in mind we're looking at the weekly at the moment, so if we scan down to the daily, we can see that there's high potential for price to come back, respect this well trodden pathway of testing the 50 moving average again before making a new swing low, and again and again and again and again. So we're keeping our eyes on CAD Swiss as a currency pair with multiple entries for long-term trend continuation sells. So that's one for your watch list. Even if you might have to wait a week or even 2 weeks for it to come back to this 50 moving average, who knows, by the time it retraces you might get a price to come back and test this previous swing low here, and by the time it comes back, this previous swing low of the 30th of December will intersect and cross over with the 50 moving average, so we'll get that correlation there as and when we take this trade. But of course there's no guarantees, but we do lie in wait for them and trade our probabilities. And when we've got the weekly looking bearish here, we're in the extension leg on the weekly, and we've got the same thing on the daily. Of course after a pullback, a fall is a lot more likely after a pullback, but we've got much higher probability that it's going to go down than up, quite frankly. So we've got probabilities in our favour, and this is something which, you know, a lot of people ask me, you know, when people find out that I trade financial markets out and about, they ask me, oh, so what do you think is going to happen to cable, or what do you think is going to happen to the euro dollar tomorrow? And I'm like, well, I don't know, I have no idea, but certainly when I see a technical setup based on what I've just told you, I will trade it in that direction. But I actually do honestly have no idea what the market is going to do next, generally speaking. Markets can do anything at any time, and it's our job as technical traders to essentially find order within the chaos which is on the charts before our very eyes. And we do this via technical analysis, and we do this via looking at the higher order time frames, like the monthly first, enabling us to get perspective on the market. And as we can see with CAD Swiss, we've got lower highs and lower lows. Fantastic. Then we go down onto the weekly, and we can see the same again. Still uniform lower highs and lower lows, except we're actually now getting closer to a time frame in which we want to trade, because of course, you know, we want to trade maybe the daily or the weekly, not the monthly necessarily, because we're traders. We want a chance of actually making a profit before we die, not having to essentially keep the trade open for 4.5 years or anything like that, but we want to be in and out of the market within a reasonable period of time, having taken advantage of the best move we possibly can in the safest way possible. And we can do that via the daily and the weekly time frame very nicely. However, the only real sticking point for a lot of people when they're trading this style is, of course, patience. And a lot of people, a lot of industry moguls, if you read their autobiographies, they'll have one thing in common, in which the best advice they'll impart onto you is patience and discipline. And that's such a truism. So a good way of dealing with that is having a punishment and reward system. If you actually have a trading plan and you follow it, and if you're certainly a client of mine, then you damn well ought to have a trading plan. If you don't, drop me an email, we'll talk about it. And I can issue you a punishment and reward system as well to go with that, so that you're rewarded when you follow the rules and you're punished when you break your rules. Anyway, that's it for now. So just to recap on the daily, on our watch list, we've got Aussie, New Zealand, we've got on the on the daily, on the watch list, we have plenty. We've got Aussie, New Zealand, we've got Cable, Euro CAD, Pound CAD, Euro Aussie, Euro GBP, Aussie Swiss, and on the weekly we are watching New Zealand CAD, Aussie New Zealand, Aussie dollar, CAD Swiss, and Euro GBP. Have a great week, take care, and happy trading.
My name's Lee. I've just been on the Lazy Trader course session with Rob Colville. Rob's a first class trainer. He knows his stuff. He's very, very knowledgeable about the markets. He went through a strategy with me of end of day trading strategy, which I learned and picked up quite a few bits and pieces. It's very interesting, and Rob's very clear, makes things very simple, and breaks it down into simple and easy concepts that you can understand. So I'd recommend that people go on this course, because I'm sure it's going to improve my trading, and I'm sure it's going to improve your trading.
I've been trading FX since 2001, started with an end-of-day system, which I found boring at the time, but now I know better. Boring is great. I hate the screen with a passion, so I'm happy to have Rob and the Lazy Trader as part of my support network. Simply, price action is the key to a stress-free, happy and profitable FX life. The trades that Rob supplies are a great bonus. Less is more, less trades and more time to enjoy the day.
Hi, I'm Luciano. I've been using Lazy Trader for a little over a year now. One of the main things I like about the service that it provides is that it's more than simply a trading signal service. Rob, the head trainer, actually takes you through why he's taking this out. He guides you through the principles that underpin why he thinks the market's going to move in a particular direction. So that's absolutely essential for someone who's trying to learn how to trade, because it means that you're not dependent on the person you're getting the information from. The longer you do it, the more you learn, and in time you're able to go into the market and become profitable in your own right without being reliant on someone else. The other thing I really like about the Lazy Trader is that it caters to all ranges of market participants. Whether you're someone who's new to trading, or you're someone who's been trading for a few years, or whether you're someone who's been trading for quite a long time, there's definitely something in the Lazy Trader for you. I've been trading for a little over a year prior to joining Lazy Trader, and within a few months I had already learned so much and developed my trading as a result.
Trading the Forex markets is easy money. That's what I was led to believe when I first embarked on my journey to learn to trade. I had attended a few courses, read a few books, I opened my trading account ready to take the markets by storm and trade my way to financial freedom. Within 6 months, my account had vanished. The trade history on my broker screen was a sea of red. This wasn't how it was supposed to be. What had gone wrong? I was supposed to be steadily compounding my capital, growing my funds, building up the cash. Yet my actual experience of trading was more like slowly bleeding to death from 1,000 cuts. I read some more books, tried a few more strategies, opened another trading account. This time it would be different. This time I would crack it. It took roughly the same amount of time to blow that account also. Nothing seemed to work. I would take one step forward and several backwards. The statistic that 92% of people lose money trading began to ring in my ears. Maybe this wasn't such easy money after all. Maybe the dream of successfully trading the markets is a lie perpetrated by unscrupulous salespeople to get you to top sign to expensive courses. I wasn't ready to give up. I firmly believed there was a genuine opportunity in the Forex markets if only one knew how to successfully harness it. It was about this time that I became aware of the work of Rob Colville and the Lazy Trader. Finally, things started to make sense. In life, you wouldn't engage in an activity without first adequate training and preparation. You wouldn't get behind the wheel of a car. You wouldn't attempt open heart surgery. Learning to trade is no different. Rob offers a clear and focused way of looking at the markets, to filter out the noise of random activity and to look for high probability setups. His end-of-day approach fits perfectly with my lifestyle, as I'm not yet in a position to give up the day job so I can fit my trading around work. It also means I'm not forced to stare at a screen all day waiting for setups to appear. End-of-day trading gives you the best return for time spent in analysing the market. The Earn While You Learn program offered at the Lazy Trader is superb. Trade setups are emailed to me immediately as they appear. The logic and justification for entry are also included, as is the target and stop loss. My account balance has already started to improve, as the quality of the trades is excellent. I recently made 4% on a trade that took 10 minutes to enter and just a few days to hit target. At the start of each week, a video outlines any potential setups and may be forming. All this helps to improve my understanding of the market. I only need one successful trade per month to cover the cost of a subscription, which is extremely good value considering the amount of information that is continually supplied through the website. I really feel that I'm finally on the right track with the Lazy Trader. My knowledge and understanding of the markets is improving. Rob is a great teacher who really knows his stuff. I would highly recommend his services to anyone looking to become consistently profitable in the Forex markets.
Hello. Up until February of 2012, I had been spread trading on and off for about 4 years, with mixed results. Ultimately, what I lacked was a winning approach to my spread trading. On a flight to South Africa, I met Rob from The Lazy Trader, and after a detailed discussion about trading in general and my approach to trading, I decided to give The Lazy Trader a go. Having been trading lots of different markets, The Lazy Trader in the first instance encouraged me to focus on one market, FX, and allowed me to master a high reward to risk strategy that had definite rules for entry, management and exit of trades that, to be honest, provided a genuine edge. The educational materials provided through the Earn and Learn program are detailed but accessible and reinforced my existing understanding of the fundamentals of trading. This is backed up through regular trading alerts that include full justification for each setup. In short, the combination of education and trading alerts has enabled me to improve the consistency of my trading and, most importantly, to become consistently profitable. I would recommend The Lazy Trader to anyone who wants to develop a winning approach to their trading through education and continual development.
Rob and team live and breathe this stuff because they are a lot cheaper than their competitors, and you can be assured that they work tirelessly to seek out only the best opportunities for capital growth. The program contains a strong educational element, and I would recommend it to you if you are interested in Forex at all.